Hey, this video is about something every automated trader needs to understand: the hidden dangers of building a trading bot using TradingView. Now, don't get me wrong, TradingView is powerful. It's the go-to platform for charting, scripting strategies, and testing ideas. And with services like Tickerly, you can even turn those strategies into live automated trades. But there are some real risks here. Things that can trip you up if you're not aware of how TradingView actually works under the hood. In this video, we're going to go over 5 key dangers you need to know if you're using TradingView to power a trading bot. This is based on real experience from traders like you who've run into these issues and figured out how to work around them. Let's dive in. Danger number 1, the backtester isn't reality. It's just a simulation. When you're testing a strategy in TradingView, it's easy to get lulled into thinking that beautiful equity curve is what you'll get in real life. But here's the truth. The backtester is just a simulation. It's not showing you what actually happened with their live alerts. It's just showing you how the script would have performed, assuming perfect conditions and perfect execution. What really matters is the alert log, the actual alerts that fired in real time. That's what triggers your trades through Tickerly. If an alert didn't fire, the trade didn't happen, no matter what the backtest says. So never judge your automation off the backtest alone. Always check the alert log or the log on Tickerly or your actual exchange. That's your real trading record. Danger number 2. Updating your strategy doesn't update your alerts. This one catches people off guard all the time. You tweak your strategy script. Maybe you change how entries are calculated, adjust your stop-loss logic, or modify risk levels. You hit save and think, great, now the bot will behave differently. But unless you manually delete and recreate your alerts, nothing actually changes. That's because each alert in TradingView is tied to the version of the script that was active when you created it. So even if your chart updates, your alerts are still firing based on the old logic. And that disconnect can cause serious confusion. You'll see one thing happening visually and something completely different happening in your trades. So here's the rule. Anytime you update your strategy, always reset your alerts. It's annoying, but it's the only way to be sure the alerts match what your script is doing now. The third danger is TradingView lets you do anything. Your exchange probably won't. One of the biggest traps with TradingView is that in your script, you can do pretty much whatever you want. You can open and close positions freely. You can flip from long to short instantly. You can trade any symbol you see on the chart. You can scale in and out like a machine. It's all possible in the simulation, but when that strategy starts sending real trades to your exchange through Tickerly, you suddenly hit reality. Your exchange might say, nope, you can't do that. Why? Maybe you don't have the funds in your account. Maybe the symbol isn't actually tradable on that exchange. Maybe shorting isn't supported for that instrument. Maybe the market is closed. Or maybe the volume just isn't there, and your order would cause huge slippage or fail altogether. TradingView doesn't check any of this. It just assumes your orders will go through. Tickerly tries to bridge the gap. It takes your strategy's alerts and sends them to your exchange, but it can't force the trade to happen. It can only ask nicely, and sometimes your exchange will flat out reject the order. That's why it's so important to understand the execution context you're operating in. You have to write strategies that don't just work in theory, but that work with your account, your margin settings, your exchange rules, and the quirks of real market conditions. Otherwise, your automation is just a really fancy way to send broken trade requests. Danger 4 is that entry prices in the backtest are estimates, not reality. When your strategy triggers a trade in the backtest, it usually assumes you get filled at the open of the next bar. That's fine for simulation, but that's not how real execution works. In real trading, a few milliseconds of delay can change your fill price. The market might have moved. Liquidity might be thin. Your order might not even go through if conditions change fast enough. And while that might not matter much on higher time frames, it can have a big impact if you're trading short-term setups or using tight risk controls. With Tickerly, you'll see the actual price you got filled at on your exchange. And yeah, it often doesn't match what TradingView showed. That's not a bug, that's just how real markets behave. So when you're evaluating performance, don't get too hung up on backtest precision. Real fills are messy, and your automation has to be able to handle that. The final danger, number 5. TradingView was built for charting, not for automation. This one's a bit more subtle, but it's just as important. TradingView is, at its core, a charting platform. That's what it was designed for. Visuals, indicators, strategy backtests, helping humans spot patterns. It wasn't built as an automation engine, and that shows up in ways that can catch you off guard when you start wiring your scripts into live trading systems, especially with automation layers like Tickerly. For example, repainting. In a charting context, it makes perfect sense. Your script might update values or signals as new bars come in, even adjust historical signals to look cleaner or more informative. That's totally normal in charting. But in automation, that kind of behavior is dangerous because it means the script might show a signal that wasn't actually there when the bar closed. Or take look-ahead bias. Some scripts unintentionally use values that are only known at the end of a bar, even though the strategy assumes they were known at the open. It works great in backtests, but the logic falls apart when running live. And sometimes, strategies include code that works beautifully for visual feedback. Things like triggering signals based on custom drawings or user interactions. But those don't translate at all to live, time-based execution. None of this is wrong in a charting environment. In fact, it's part of what makes TradingView so useful as a development tool. But if you're building strategies for live trading, especially automated live trading, you need to design with these limits in mind. Think in terms of real-time data flow, bar close execution, no future knowledge, and no dynamic signal repainting. You're not just painting lines, you're sending real orders into real markets. So just keep that mental boundary in place. TradingView is excellent for designing, testing, and visualizing. But it wasn't built to be the final authority on live trading behavior. When you use it as part of a full automation pipeline, like with Tickerly, you have to build your strategy with automation in mind, not just the chart. All right, that's 5 dangers you need to be aware of when building bots with TradingView and Tickerly. If you've run into one of these, or if you've got that feeling that something just isn't matching up between your chart and your trades, you're not crazy. These are real issues, but they're fixable. Tickerly exists to make that whole automation layer easy, clean, and safe. You can try it free for 30 days and see the potential for yourself. If you got something out of this video, give it a thumbs up, subscribe to the channel, and let us know in the comments what your biggest pain point has been with automating on TradingView. Thanks for watching, and until next time, may your algorithms be profitable and your entries well executed.